All right, ladies and gentlemen, I hope you're having a wonderful evening. It is not Thursday, but I got a little caught up at leg day, so I figured we should do a live watch list. We could focus on a big part of today, and I could go over a really important play, and I want to show you guys a lot, and there's really not much because, one, we had the CPI today. We do have a little bit of data tomorrow, but the reaction that we got today, it was very similar to what we have discussed for the last couple of days, and I really want to make sure you guys understand that. So the keys are very simple today. I only have a few of them. I got a really important few of them. I got a really and DVR is on, so make sure if you want to be live, if you're here live, you got an update on that. But we have to talk about it today because I forgot what I was saying. I have a play for you, and we need to discuss what you saw with both the data and how it's going to be playing out. Oh, yes, that's what it is. I have the sell the rip for you. Yes, I have more information. We're going to go over a chart, and I'm going to go over the last Trump trade. Remember, that is how we got prepared leading in all of this. I'm going to talk about KRE, Beto, and ARK, and we made moves. And again, some of those were like right under 1,000%. It was absolutely amazing, but now we may have a little bit more clarity on when to sell the rally. So I hope you're ready for all of it. I have the plays. I have the keys, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live. Look at it. It even shows up. It's even giving me a notification now. This is amazing. YouTube.com/the stock market, baby. We are going to be live. Even after this stream, it should take you right there. So I hope that I see you there. I hope you have a great time. And we were live for the CPI today, but tomorrow you are going to be getting the PPI. It's not going to be as important, but you will be getting moves there in the morning. So hopefully we see you on stream, and check out the Twitter too, or X is what they call it. Real Cult News. I've been on that lately. We've been having fun. Again, it has, where was it? Where's the Twitter? We're going to go, I don't have it up. I have the economic calendar, but yeah, Real Cult News. You'll find it. You'll figure it out, man. But in the meantime, I know my people on the recap, you're going to have to be a little patient with me, but I promise it is going to be worth it. But let me say what's up to the chat, baby. What's going on? How we living, baby? Good evening. What up, Dago? What up, Michael? What up, Star? Flav, Squeeze, Javier, Amir, Richard Barrett, baby. Oh, I see you. What up, Mr. Malone? What up, Brian Fierros? Good morning, good evening. I see Brian in the morning too, man. What up? Well, how you doing, Monica? How you doing, Ram? What's going on? Hamza. What's up, baby? What up, JJ? What up, Jamal? Kappa Belly, Dos Nots. Y'all ready or what? What up, Cynthia? Are you guys ready or not? Do you want me to? We can restart. I don't know, you guys. I already did leg day. I'm still hyped, but like for real, I'd rather put the energy into talking about. We could do some questions afterwards too. Oh, maybe we do a Zoom call. No, I'll save the Zoom call for tomorrow. You know, we've had some awesome 11 out of 11s too the last couple of days. So y'all more than ready? Oh, say less than. Right off the bat, baby. Let's get right into it. So I hope I don't disappoint too much, but I hate to break it to you. What you need to be focusing on is literally yesterday. So if you already watched the last two watch lists, you are ready to go. I am going to build off of that a little bit more today, but I can't stress it enough. I even recapped it this morning. There is a bottom to top effect. We are looking at the bond yields to guide us on this whole sell the rally. So what do you have going on? Oh, what up, Frankie? Oh, that's what's up. Oh, I didn't even see. Oh, man, that's a third timer. It showed up like a first one. Oh, and Johnny B. Good. You know Johnny B. Good. He ain't new, baby. Good evening, man. Good to see the chat getting me hype. But we talked about this yesterday. I brought this up even in the morning. Again, the bonds are going to let you know when conditions are tightening. I'm even trying to make it easier for you guys to follow. I have been looking at the long-term bonds, and the long-term bonds are very interesting, but don't make it difficult. The 2-year. Just look at the 2-year. If that gets to 4 or 5, that is one level of tightening. We were just at 5%, so it could still go higher, but 4.5 and 5, those are going to be your signal as far as when the tightening is occurring. So keep that part in mind. But again, what we're seeing in terms of bottom up, oh my goodness, it was very fascinating today because I think you guys saw it in real time and you saw how slow it was. The CPI came out and it was actually in line. Remember, we were talking 0.4 would scare the market, in line would be good, and anything below would be amazing. Well, it came in line. We're going to talk about the narrative of inflation, but you'll see bonds popped up. They went up for a little bit and then they sold off. Again, it was like another 2% top to bottom move, but is the bonds selling off interesting? Yeah, but remember, we're tying it into the leaders. Look at the Russell. This was the wild part because you would think with the bonds dying, it would have added pressure. We're getting back to that election zone. Like I said, once we start breaking below that, I think it's going to slow the rally down. And, well, SPY was trying to move, and it looked like it was up most of the day. Go look at the NASDAQ. Go look at the SPY. While the bonds were dying, it looked like they were totally ignoring everything. Even the Russell was up by 1%, but literally 4 or 5 hours later, the bonds kept dying. They kept adding the pressure. You broke those election zones, and sure enough, even the Russell, it flipped positive 1% to down by 0.8. And then you eventually, the NASDAQ was doing good. And then, yeah, it's a little bit at the margin. SPY did better. But like I'm talking about, this was literally that bottom to top effect. And it's not going to play out second by second. And I'm sure one of these days it's not going to work. Like, we're going to see what happens. And I'm sure the bonds will break down and the market will be able to rip. We've seen that before. But when it's all said and done, this general idea on the macro sense, it should play out. As the rates go up, they are going to start hurting the bottom of the market. They affect the small cap first, then it works its way up through the Dow, the SPY, and then the NASDAQ. So we really, really saw that today. But now, like I'm saying, we have to watch the bond trades. And that's what I'm saying. Please watch yesterday's watch list. I think you'll get up to speed, or even Mondays as well, too. But now we are going to be looking at those bonds. Like I'm saying, I hope two-year 4.5 makes it easier. You are trying to figure out, when does this rip sell? What rip am I talking about? The post-election rip, what you get from the deregulation and the red sweep. Remember, we were talking about the 2016 trades and how that played on the last time you had this sweep. So here's the deal. Last time this happened in 2016, I showed you the numbers and how they played out. I even posted it on the Twitter, or X as they call it. I can't get used to that. But here's the deal. The Russell stopped, and this is why this chart is a little deceptive. I want you to understand it. It's showing you cyclicals and defensives. That's part of it. But this blue line right here, the dark blue line, this is the Russell versus the SPY. So that means that the Russell outperformed the SPY. Just because this goes down, it doesn't mean that they went negative. It means that the Russell outperformed. Again, why would the Russell be outperforming? The regulation and hopefully the rates in an environment that is more favorable for that. Again, that is what happened even in 2016. And in 2016, the bonds did end up selling off. But at this point, you've done more, I think, in a month or half a month on the bonds than you did in like 6 months on the other Trump trade with the bonds. It's pretty wild. But the point is, the sweep trade in 2016, and again, a lot of those trades already played out. That's what we've been going off of. That topped out around the middle of December. So around like December 16th to 19th, that's when, after that point, the SPY started outperforming the Russell. Whether they went up, whether they went down, that's going to get into the nitty-gritty, but essentially, you stopped the crazy rally of this Trump trade. It was about middle December when that all ended. So keep that in mind. And maybe it shifts to the Santa rally. Maybe people go to something else. But at that point, that's when some of these longer duration plays, that's where they might be able to move out of steam. So literally, if it plays out like 2016, you have 1 month of time. Anything sooner, I mean, you're already running out of shot clock. Anything longer than that, you are going to be partying. And again, I do think financial conditions via the rates, that is what is going to communicate it for us. So that is your first key. Again, you got to pair it. It goes well with a nice pairing of yesterday's watch list. You could really get all the flavors of the long duration trade. You know, I'm telling you, it's a good pairing with yesterday's watch list. Yes, okay, anyways. But coming into key number 2 now, what we have to do tomorrow. So let me get a sip of water. See, if I wasn't live, I could just edit that out, you know, so we're live. It saves me some of the editing time. and now I could give you my live commentary. But key number 2, my friends, PPI and retail sales tomorrow. So PPI is going to be a big deal. Again, anything related to inflation. However, PPI has not been as aggressive as the CPI. So this is going to be an hour in the morning, I believe. And we're going to hear from Jerome Powell tomorrow as well, too. It's Thursday, but PPI in the morning, headline is expected to come in at 0.2, but again, we don't really care as much about headline if you really are trying to get to the nitty-gritty of inflation, and we're going to talk about today. Jobless claims is tomorrow as well. Where is it? Core PPI. This one is expected to come in at 0.2. I thought it was supposed to come in at 0. Which one was I looking at? PPI excluding food and energy month over month. We got one at 0.1. So there's going to be a core PPI year over year. That's expected to pretty much stay the same. But if you look at it, PPI has actually been a little better, just like everything else, though. It has ticked up. But again, PPI numbers-wise, nothing close to CPI. You're good. But again, just like yesterday, it's going to be the same exact game plan. If you get a higher month-over-month number, again, anything like 0.4, that's probably going to freak people out, and then even watch out for the jobless claims. But it's just a matter of, will we react with the narrative? Are we going to react with the bonds? And then how do the bonds affect the rally and all of this positioning? So the data is going to be important points, and that could even move the bonds around a lot, but it is generally the same game plan. If nothing is blowing out of the water, increasing inflation, or showing you're slowing down, or anything related to jobs, nothing is changing. I hope you guys realize after today with the CPI, the narrative right now, if you went and looked at the CPI report and all the data we've been getting, the narrative is that inflation is creeping higher, but we could still absorb rate cuts. Yes, I know it sounds wild, but pretty much people are noticing that inflation is not going down as fast anymore, and now it's starting to tick up in some areas. Even today, if you looked at the categories of inflation, a lot of the goods services that you thought were down, they're starting to come up. That's kind of like the materials and all of that. Remember, oil down, that's helped us with a lot of things, and it's already been a couple of years, but pretty much people are noticing that it's not dramatically falling off of a cliff. Inflation is slowly creeping up. Are they worried that it's going to rage? Well, we just went through inflation. Of course, they're going to be scared of that, but they're not terrified that it's immediately going to shoot up to 7, 8, 9, 10. That's why we got to wait till a lot of things happen. But that's the narrative right now, because even after the data, you priced in those rate cuts for December even more. The data today said, inflation is kind of coming back up, but the Fed should be able to still cut rates. Maybe it'll lead to inflation, but again, they are not too worried. It's a very interesting concept, but I really hope, I don't know if you guys have been listening to the Fed and even Powell and what we've been getting. I think it's pretty simple right now. I mean, the Fed is leaving their options open. Object in motion will stay in motion until acted upon by an equal or opposite force. So I apply that in a policy sense, but it's very simple. Either inflation is going to skyrocket, and literally we do what the 1970s did. You go up to 9, come down to 5 or 4, and then we rocket back up to 12, and then we have a big problem. And then the Fed is foolish for cutting rates, and if anything, they would stop cutting rates and start raising rates. If you had it. Again, this is in the future. You got to think about it. It's either inflation really materializes and it goes crazy, or they are worried about the job market weakening rapidly. That's it. Again, every Fed member, go listen to what they're saying. Some are saying we're at neutral. Some are saying we're above, below. They're all saying whatever. Bostic is trading a bunch of municipal bonds. It's just he's just doing his thing, but they're all kind of saying the same message. They're bringing up, how you got to look at jobs and inflation. This is the balance of the risks. They're moving on their plan. They're going to keep going gradual. They think everything is tolerable now, but when it's all said and done, their plan is going to change from what we're getting now, the narrative. If inflation actually comes up, and if it does, it'll be wild, and that'll change the whole Fed plan, or the jobs market is going to start declining. So, like I'm saying, ask the Fed. They will tell you this. I think Powell will agree with this in a much more professional way to say it. So that's what we're going to be getting. I think it's going to be simple, and now I have more to share with you. However, it is not a part of the keys. It means let us get into the plays. So, right off the bat, those are all of your keys. I think it's going to be simple moving forward. Again, we either get relief from this rally or it keeps going. Bonds and the data are going to keep communicating. That's it. Peja Stojakovic. Oh, Peja Stojakovic. Man, you're a real one, bro. You know Peja is one of the greatest. Now I'm honored that we're doing the plays while you saying Peja, because I hope this is a Peja Stojakovic clutch play. But I'm going to tell you right now, the more and more I realize it, and this is the benefit of this channel, man, I could give you ideas, and I pride myself on getting them relatively fast. And the fact is, you're getting a lot of things early. I know the what on this play. I just think I'm going to be mad early, if anything. So let's talk about TLT. And why I'm bringing this up, because it relates to everything going on. It relates to this long duration trade. And it's very simple. I think 4% is the new 0%. Again, you got to watch yesterday's watch list, because I did elaborate on this yesterday. You got to understand this. That's why, yes, I think 5% is one of the best forms of insurance, and that's because I think rates should be at 4 on the long duration. If we are cutting rates, even if we're moving up, I think we should be at 4% on the 10-year. Why? Because I think 4% is both high, restrictive, and it still allows you to operate. And you could still get crazy. I mean, why? Because, look, we've been at 4, and the market was doing all sorts of things. So that's how I'm breaking it down. That's why the thing, you guys read. Oh, okay. Well, we'll talk about that at the end. You got to ask me about, remind me about the deficit if you read that, okay? And like the video, since I know you're paying attention. So there you go. But that's the broader idea, 4%. What I'm trying to say is that I think the rates have overshot. I think you could still have high rates and still have this market and go from wherever, especially with an environment of cutting. I think 4.5 on the long end is appropriate, not necessarily 4, 5, or 5. However, that is exactly why I'm buying 4, 5, and 5 and telling you that I like it. Now, that's one part of it. But I did another trade today, and I might be mad early on this, but it's very simple. Like I'm telling you, if this rally is going to have, and this is why I think I'm early, because we're literally like right here. You see what I'm saying? So that means these Trump trades, they could edge up a little bit, have another pullback, hit a new high, pull back half of that, come back to where we are today, and then another 2 weeks later, run up to a new high and peak, right? So that's why I think I'm early with this idea, but I still like it. I mean, and maybe you'll see what I'm thinking here, but go look at Beto, KRE, and ARC. So what I did today is I rotated my profits from all of these. Again, these were plays we made around the rate cut, the first rate cut. And again, I made TLTs around the first rate cut too. But this was made around there, and then KRE, part of the Trump trade as well. And all of these are part of the Trump trade. Again, small cap, long duration, ARC, KRE, regional banks, full Trump trade, Beto, crypto, Trump trade, right? A lot of these plays did very good. Some came from the grave. The KREs went 13 cents to like 70 or 80. I think I could have got $1 for them at one point. But they were pretty crazy at that point, but it was good gains. I mean, again, it was like the $200 of free options I had. I sold out a KRE for like $1,800. It was great. But what I did was sell out of all of those plays. I already made them free yesterday. They were even up a little bit more. And I rotated out of that and I bought TLT for March. So I'll go over that play here in a second. But why did I do that? Because I think that TLT should either be a lot higher, like I'm saying, 4%. And again, if you don't know, like 4% on TLT, it is around like 99, 100. It's not like, I think even a little bit lower. It's not like it's that crazy. That's still a multi-year low. I either think TLT should be higher for many reasons, or I think that these trades should be coming down, because if TLT goes lower, and the bond yields go higher, all of these long duration trades should get affected. So this is what I was showing you guys today, and I encourage you to look at it and do this yourself. But ARK, I mean, again, long duration, you can really see even after the peak in '01, as the rates started to go higher, ARK was already dying before that. And then again, you'll see there's times they've had gaps. They weren't perfectly matched, but again, from the market ruts in the rallies, you can really see how they were matched up. I mean, it makes a lot of sense. Long duration, these companies are unprofitable. They need loans. They're going to survive off of easy money or easy regulation, right? So you'll notice, though, and again, these companies were risk off. Even on August 5th, when we had the little flash crash, bonds popped up. They died. But again, as rates were lower, they got a bid. And this is where the Trump trade, it was forming around here. But then you'll notice all of them did this. Every single one, all of a sudden, and this is when, again, people were talking a little bit more extra fear. Bond yields started blowing out. It wanted to go down, but then the Trump trade and then the deregulation stuff and people getting excited, it popped it up. So this is that gap that I'm talking about, but it's the same for all of these. Again, KRE, it doesn't really match up dollar for dollar, but again, high interest rates and the banks, it makes a lot of sense. Again, when the rates have gone down, if anything, that's what ended up killing the banks. Again, I don't know if we're going to do the same thing, but like I'm saying, this is why we made a lot of money on these trades. So I'm like, hey, why not? If I think either this goes up or these come down, why not take a couple 100% and then put it into the cheap one? It's one or the other. I don't know what's going to happen, but I'm willing to take that risk. That's what I'm saying. And then even Bito's a little different. You got to go to IBIT. But even then, again, when the rates and Bitcoin and how it moves, I mean, it did kind of go hand in hand. But again, Bito trades a little different because it's like that future ETF. But hopefully you see what I'm saying here. And that's why I was like, hey, man, if I think that the ones that I'm up on could come down or TLT is going to come up, then that's it. I could play both sides, but I already kind of played them. So my TLT plays, I either made them free or lost from the rate cut till now. I think it was like 3 out of 4 hit. And then, again, the ones we made free were all taken care of. But that's why I'm thinking, I'm like, hey, I made good money on it. So what I did, I sold around, it was like just under like $3,000. And then I put $2,000 into TLT for March. So I got a lot of TLT. I got time. But then I still walked away with money. And yesterday, beyond the $3,000 I got today, I already got to get the initial investment backs from all of them. So even like KRE, the initial investment was pretty large. And then same thing with the Bito ones too. So that's why. But good question. But hopefully you get what I'm saying. And either TLT comes up or those names are going to come down. I'll go to the play here in a little bit. But I know the what. I can lose on this play. I'm not saying I'm correct. I mean, I encourage you to challenge me on this too. Feel free. Let's find a counter to it. I do think if I'm going to be wrong, I'm just going to be early. And this is going to happen like way later than not. And by the time it happens, if these contracts decay, who cares? You just lost. But when it's all said and done, I do know the what. I really do feel like one or the other. Again, sell the rip. That's something that I've been on. The bonds moving, I'm very, very confident in that. So it's one or the other. So I don't know how it's going to play out. If anything, the timing is going to be shaky. But for now, I'm on there. Not a recommendation. I'm telling you and showing you what I did. So don't gamble. I mean, again, any option, go look at the long term. Put your money in the long term, guaranteed money practically. But anything that has a date, bro, you are dancing with the devil. But we will see how this one plays out. And like I'm saying, man, 4% is the new 0. I think 4% gets TLT higher, but not a offensive high where you're like, why are bonds that high? You know what I'm saying? That's why I'm thinking the market could still operate. And just, I don't know, like why, my question is, why is everybody acting so fiscally conservative all of a sudden? Like I'm saying, in March 23, end of 2022, and we were terrified. We were terrified of 4%. I don't know if you guys remember that. On the way up, 4% was a scary number. And now people are acting like they need 5 when inflation is going up by like 0.2 or 0.3. And if anything, it's nothing. Like, why are they so worried now about it? So that's why now I wanted to make sure that you guys were paying attention. And clearly you guys were. I think you wanted the bond tin, my friend, but very, very simple here. I've said this. I think, like I'm telling, if you go look at all the long duration trades, like we're saying, if rates go up, long duration won't take off and vice versa. But I was saying this even before Trump won. I just said I told you, like KRE, it should be dying if if the rates are dying at that level of volatility. I mean, that's why I was kind of shocked by it. But ever since like October 7th and 9, and people started kind of, Druckenmiller shorted the bonds, and a lot of people started going like hawkish on this idea and not anything else. I mean, it really, it was odd, but here's my tinfoil, because I was saying I think the second half, I think you could just go compare it with even like KRE. It was like right around here, or like right around here. This is where the trend started to break. But I mean, I've been telling you, somebody, it could be. Oh, you can't see it. Here, even when we pull it out. So here's the chart. But like I'm saying, you could tell even ARK and KRE, they wanted to go down as the bonds were dying, right? It wasn't right here, but look at the beginning of October. That's where all of this happened. And I'm like, man, you could say, well, they're not lying. They were buying something, or you could blame a mystery bond vigilante. But I've been telling you guys, the bond vigilantes aren't real right now. If you go, like, you find the bond, I have the chart somewhere, and I showed you this on a watch list. The bond vigilantes don't, like, if the 3-month and the 10-year spread isn't wide and bond, it's not a bond vigilante. Nobody is going out. This is actually very volatile but extremely orderly. That's what I'm saying. So it's not, as much as I want to believe a bond vigilante, it doesn't make sense, right? Literally, it's a boogeyman. It really is, right? That's why I'm saying it's tinfoil. But here is my tinfoil answer. This is the best I could do. Are you ready for it? You tell me. It's not the computers. I'm not. You think I'm gonna come at you with some? You think I'm gonna just blame the computer? Like, what's his name? Jared Bernstein. Well, we don't know how it. Well, the computer just is a computer, and the computer is a 1 and a 0. The answer, my friend, is the U.S. budget deficit. I think it was Yellen. Yeah, I know, wild. Maybe that's why the Fed was cutting rates. Who knows? So I think it makes sense, right? I mean, I'm not too much in la land. You know what I'm saying? I'm not in la land. I'm looking at the macro. I mean, this is government spending and bonds and all of that. So this was at the beginning of October. Remember, again, and gold was already running. Remember that extra like $400 billion? You remember we showed that chart. It was on Twitter. I think I retweeted it. And it was the deficit just rocketing up out of nowhere. Remember? And everybody was kind of shocked. That was before October. So here's the deal. This isn't that. This is different. This is actually the U.S. budget deficit at the start of October, and it's like 5 times higher than last October. And last October, the yields were a lot lower, even though it was a lot worse, ironically enough. But this is the second highest start to an October deficit since 2020, like COVID. Like, we're talking like economy shut down. So this is on record, but that's the only thing that I could blame for the extra pressure. Because, again, I'm not denying the pressure. I mean, there's clearly, it's causing a, room for opportunity, and we'll see what happens. But, and like I'm saying, maybe I'm early, maybe I'm wrong. We'll find out. But, this is the whole process of, we're trying to find out, right? But it seems that my tinfoil is that maybe this was just the deficit, the government adding a little extra pressure. So we'll have to see. But other than that, the bonds, if they keep experiencing pressure, go back to the original game plan, and you should be prepared. But Chada, that is your first play. Yeah, that's your first play. So I hope you like it. I'll go over the play in a little bit so you could get up to speed with that. Then the second play is Disney. Just watch out for Disney tomorrow. Earnings should be action-packed. I was telling you, I think it can move like 10, 15%. Yeah, whether up or down. It's either going to get cooked tomorrow or everybody. You're going to be like, I love Disney. Oh, my gosh. Oh, put a chick in it. What? So, Kathleen Kennedy. So we'll find out, but even Nelson Peltz, he's sold out. Remember, he's the one who got him the last 30%. But he was hyping it up today. Everybody's been focusing on the CEO change. We already know who it's going to be. I'm pretty sure it's going to be James Gorman. Believe it or not, everyone's like, you can't put a Fox commentator and the government at a job. Meanwhile, Disney is like, let's go take the head of a bank and ask him to make movies and theme parks. So, yeah, James Gorman, we already know who it's going to be. I mean, he's already been elevated on the chair. People are excited about that. So, we'll see how it plays out. But I just think it's going to be a big post-earnings. We have it in the long term, too, but that should be a good one. So, watch out for that tomorrow. I'll be there in the morning if you want to see how we play that. So, that is all I have as far as what to watch. Again, TLT and all the long duration, I think they're going to be exciting. So, keep your eyes out for it. And as far as the plays that I made today, I made that Spotify play. I was telling you I wanted to go for a cheap one. I thought it was going to reverse like always, and this time it didn't. It did not do that today. But I only spent $9. So hopefully, you guys see it with this strategy. If I'm right on these plays, they go up 100, 200% instantly. Small money. Maybe you get lucky in this volatile environment. If you're wrong, hopefully you're not losing more than like $10. It has a little bit of time, but either way, I thought it was going to be a dramatic sell-off. I thought it was going to, you know what I thought Spotify was going to be? I thought Spotify was going to do what Kava did because Spotify was up. That's what Spotify always does. Kava was up 15% today, and then that sold off. So you could go and look at the Kava options to see, but that's what I thought would happen with Spotify, and it didn't materialize. But, when you're going for a long shot like that, hopefully you made it cheap. But, how did these play out this morning? Let's see the ones at $1. These are Kava ones. Why you no load, Habibi? I give him a second. Maybe he load when... Oh, there you go. Yeah, I guess so in the morning, these are even expensive off the first one. But by the second candle, look, these are going for $10, $12. And then they went up to $1, 1,000%. So if you're right on it, it'll pay off. But you shouldn't bet the farm on that type of play. Hopefully that makes sense why. Because you're betting against a good stock. Maybe you get lucky, but... Hopefully you understand why it's not, I'm not going with a big strategy and a big amount of play on that. So that was the first play I made, $9. Then I sold the ARC. I sold 5 of the remaining ones. Remember, I sold out some of them yesterday. I even got like 50 cents for the other one. So there was additional profit, but I sold out the ARC. I sold out the Beto, and they all went down too. So I sold them even at a pretty good time. I think even the Betos went down to like 60 cents or something. And then the ARCs even went down. And then the KREs the KREs were higher though. We could have got an extra like 75, 100%, but I was fine taking it. So I sold out of all of those. I got like $3,000 just under that. And then I put it into 30 TLT March 100 calls at 67. The December ones, I'm mad. Yes, you remember yesterday's December TLTs. I spent about $100 on those. So, again, a lot smaller. Those plays were up 30% in the morning. I was going to make it free. I thought it was going to hold up, and then TLT flipped. So, I'm still in those. I'm still in the March ones. Both of them are down like 10 to 20%. But, again, none of them are bigger than like $300. So, we're talking like $40 unrealized. This is now the bigger play. That's why I hope you could understand that. So, again, I've made everything free. Remember the Novembers, they got clapped, but we made them free 100%. They went up 200. This is a March 20th. So, middle March, I did 30 of them. But, again, you have to understand, do I like the play? I just explained all of it to you guys with the whole thing, but there is a major caveat. I'm using a bunch of free money right now. That's it. I literally, man, $200 into the regional banks. That was on the watch list a couple weeks ago. $200 turned into $2,000. You get what I'm saying? Even the ARCs at any of those dead plays, the Beto was like $200. Even my free options, I took out $500-$600. You know what I'm saying? So it's a bigger play. I still like the idea, but size accordingly. I'm not going big because I'm like, yeah, this is it. I'm going big because I think the other ones went up a lot and they were expensive. They could still go, but I'm just moving it to the cheap one. And technically, at this point, these were all free, and I'm walking away with an additional like $700 or $1,000 realized, even if I lose all of this TLT in March. So, ta-da! But yeah, that is it. That's all that I have. That's all that I did. Other than that, I think we're gonna have a couple more weeks. Like I'm saying. Don't forget about this chart. I think right now you are like right here. So we're like in between when it all happened. We got a little pullback. You probably have a new high or a new outperformance on the Russell and store. And then it's going to come back to where we are today at one point. I don't know. Oh, do you guys see it? So I hope that makes sense. But I could kind of see it where maybe, yeah, literally, I think it looks pretty good. You might come down a little bit. Let me pull it up in context. Yeah, you'll probably break out from the prior high, get back to like 24, maybe go 2,500. Then we'll pull back to like 2,350, and then you'll go from there and then hit another high. And then by that point, it'll meander, and then the SPY and NASDAQ should start to take over if it's going to play out like 2016. So be prepared either sooner or later, but I think this is a good framework to go off of as it has kind of guided us so far, but just be on the lookout for any play action. So, Chattadonia, 36 minutes of pure stock market info. I hope it helped, but is there any questions? The final thing, Humana. Bro, all of them. I don't know if you guys noted. Whirlpool has ex-dividend tomorrow. Will be your last day. It's ex-dividends on Friday. But at the end of the day, bro, all of these value names, bro, they just went insane at the close. I guess EL didn't, but like UPS climbed all day. So a lot of the names on our list, all of a sudden, there is ex-dividend, but there was a wild value. I think it was Pfizer. That was the other one. Even they just started melting up. So be on the lookout for that. Again, that's part of the rotation there. And then again, that even actually, believe it or not, that would be your green line here, cyclicals versus defensives. So keep that in mind as well. But yeah, damn, you're still on no look November. Good for you. I already failed. Will they sell? They might, but I don't know. There's been a couple of instances where we've seen names not sell off. Like MO did that. I don't know. You guys remember? MO has not sold. Like it's sold off ex-dividend maybe like once or twice, dude. But yeah, I don't know. It's been wild. So you never know, but Whirlpool has a high dividend. Maybe it'll sell off, but you never know. SMCI just reminds me of a regional bank with AI at this point. I just high risk, high reward. Oh, the weed plays. There was news. There was news floated that the Texas governor, that they wanted to legalize weed, that there was like a bill filing, but we didn't move on that. But then Matt Gaetz was nominated as the AG. And he has had a very long history of wanting weed legalization out in Florida. So, because again, he's already in the government. So that it just started going crazy off of that. So if you get that, I guess, again, most people do think red wave would be more restrictive towards weed. But, if guys like that are coming in and kind of how Trump and the Trump team have gone very favorable towards crypto, if it goes in that direction, you'll get a pop. I mean, it won't be a pander pop. It'll be a policy pop, So I'd look out for it, but just in the meantime, until there's like real like momentum behind this legalization and people like in there, then yeah. And remember, if I could remind all of you, Trump appointing anybody, it's crazy. Everyone's treating, I've never seen people do this before. They are treating the cabinet appointments like it's the damn NFL draft. I've never seen people this attentive to it and so like, oh yeah, it's crazy. But literally, just don't forget, anybody appointed still has to get confirmed, meaning Congress is going to vote on if they should have positions, especially if it is a higher ranking one. So keep that in mind. So it's not like, that's why I'm saying, even for tying it in a weed, if you start noticing like a weed team, the weed Avengers of the cabinet starts getting organized, and you wait till they get confirmed. But if that gets momentum, I think weed will take off. But if not, it'll probably get hype and then it'll sell off like it always does, even in 2014 and even in 2016. I feel like too. So hopefully that helps. What else we got? What else we got? Should I move to Uzbekistan? Isn't that crazy? I posted a wild video. There was a guy, he was doing a TikTok on the beach. There was one of those TikTokers filming a Ask Me for Advice. And this guy asked if he should stay or not in America and like leave the country. And come to find out, homeboy faked his death like 2 months ago, 3 months ago. It's the weirdest story, man. I don't know. I tried. I wanted to post the weird. I saw it in the gym. I was working out. I'll be reading sometimes. I'll be watching stuff on the treadmill. But oh my goodness. What about the yen? The yen right now is kind of in la la land. I think it has, it's going up. That's the pressure. Again, it's following along with bonds. But mid-December, just literally by the time we peak out with any of these trades, that December meeting with the Bank of Japan, that's all that's really going to matter, in my opinion. Otherwise, I think, they may intervene at some crucial levels like they have been, but do they raise rates or not? I think that's going to be a big deciding factor. Who went to La La Land? The Japanese yen. It's kind of doing its own thing. If anything, it's just trailing the bonds. Just kind of like TLT. So that's one that's, again, look at TLT and FXY. See, that's going hand in hand. But that's what I'm saying with like KRE. It just feels like if I saw the yen ripping in TLT, at that point, that's what it is. But they're going hand in hand. And I think right now they're responding to our dollar. They're responding to us. But I think by middle of December and to the end of the year, we will be responding to them. I didn't skip leg day, bro. Come on, why are you going to play me like I did leg day? I think this is my 4th or my 5th week. I think, week number 5, actually. I've done legs every week for a month. Never in my life have I ever done that. Maybe when I had mandated PE. It's amazing, bro. It's amazing. I can't believe it. About Greco, I think that one's still interesting, but I think I'm going to wait until it either gets a lot cheaper or I just become a lot familiar with what they're doing. So that's what I'm saying. If I think for you got familiarity with it, you like it, but this is a top tick. I like the name. That's why I'm like, maybe it has to either come down to like value for me or I got to be like, maybe I'm getting involved in Greco. Is it Greco? You'll see the most gains. It's nice, bro. And I have actually. I already feel like I'll be tightening up. It's nice, man. It's nice. I can't complain. I'm mad tired though. Put my calves on live. That's a wild request. Maybe one day. I like Square. I still want a firm. MPW tied into the bonds. That's still in the long term. It's one of the worst in the long term. But I'm actually open to averaging down on it. I've only been averaging with my drip. Thankfully, they still pay the dividend even though it's lower. But MPW, whenever bonds bottom out at any point in this cycle, whether it's in the next couple months or a couple of years, if bonds bottom out and once they level out, I will make an average down on MPW, assuming they don't wind up in another BK. But yeah, that's it's tied into bonds, especially being more on the distress side. Greco. Do you know Greco? I only heard about it when Star told me about it. Like new regional failures are coming back up. Well, yeah, if the bonds get out of hand, that's kind of again, go above 4.5, go above 5. Yeah, but that's what I'm saying, bro. 4% on the 10-year blew up banks. Like, no exaggeration. Like, I don't know if y'all feel me on this. So, like, where is it? Yeah, bro. So, leading into October 24.1. And then you were knocking at 3.9. Do you guys get what I'm saying? Bro, at 3.9, banks were blowing up. JP Morgan had the best deal of his life because of a 3.9% bond on banks. So I don't know about bank fail. I'm not saying more banks are going to blow up. But what I'm saying is 4% is both low enough and high enough at the same time. That's why I'm saying at this point, if they're going to give liquidity, depending on, we'll see how policy, but how inflation is playing out and people are reacting. I'm like, at this point, I feel like 4% is a wild level, man. And that is both, again, high enough and low enough. So again, that's TLT at like $100. That's why I'm saying it's kind of like funny because like literally we are talking about we're talking about TLT getting to the point where at, again, a year and a half or almost 2 years now, that was blowing up banks, and that level was considered the danger zone. Last time, 4% brought the market down to the lowest it's been in 5 years, in 4 years. You see what I'm saying? So I feel your worry about the regionals, but all I'm saying is that that's why I like the value up here, but until we see a little bit more of the craziness or not, either jobs or inflation, I feel like this is way too aggressive for where we're at. So we'll see. We will see. Ba-da-ba-ba-ba. But there is a lot of liquidity. Again, don't forget, in many, many ways, from the BTFP to not. So that's why I'm saying maybe the banks, the banks should last. I don't think it'll blow us up again, but, it's very interesting how we're reacting at the rates that we're at, especially when you see, how it's affected conditions and other things at other times. So you're buying 1,000 Shiba. Good luck. Good luck. I think I still have my Shiba. I didn't listen to it, but Mark Zuckerberg made a soundtrack with T-Pain. That's that capital expenditures people were worried about. You know what I'm saying? So, yeah. Other than that, though, I don't know what to tell you. Pretty wild. Pretty wild. But crypto, again, it keeps going up with the dollar. So, and then Robinhood added like Pepe and Cardano and a couple of others to their trading now. It's funny. Zuck goes buckle. Oh, I don't know. I'll have to give you the live reaction on Friday. Maybe we'll listen to that one on Friday. I'll save it. I just rolled my eyes when I saw the headline. I didn't listen. So we'll see. Oh, I forgot. You bought 1 million Pepe. Nice. I didn't want to give you FOMO. I saw probably one of the craziest trades in my life. And it was like you see it from like an actual Bitcoin wallet. There was a homeboy who turned $17 into 2.9 million. That's the craziest trade I've ever seen. Off of Peanut token. Off of literal Peanut token. Peanut. Peanut, the rabbit or the squirrel? Yeah, Peanut. They made a Peanut token. And there is a wallet that did $17. It could have been a developer, could have been one of the early people, but at the end of the day, on paper, literally straight up $17 to 2.9 million. Very, very wild. So yeah, again, the crypto, it's not even altcoin season yet. That's the crazy part. That's where it's like really, really wild. because you're going to have a lot more. Oh, I got to get the watch list. I'm setting up the stream for you guys, so when you're done, it will send you there. I love you. God bless you, man. I hope you guys have a good evening tonight. I think we're going to wrap it up here in a little bit. I'm going to start migrating this over, but I do hope you guys have a good night rest. I hope you guys are ready. End of the year, man. It's already the new year. I hope you guys have been hyped, man. I hope you're motivated. And the hungry people, you ain't hungry. You know, I'm glad that you're still listening. You'll eventually get a haircut if you hang out at the barbershop. But the hungry people, this is the moment, baby. It's the moment. You better pick your lane. That's it. You act either way. You're going to do it. You either generate income, investment, from speculation to not anything, bro. But you gotta make a plan, a full-blown plan. And hunger. Hard work was made for everybody, you know? Everybody. I hope they feel me, bro. I hope so. Yeah, no, man, because again, we brought the 11 out of 11s back, and it's great, man. And again, I'm really down to help you guys move into real estate, businesses. Again, even homie was talking, again, today was talking about going and literally trading for a living and getting into real estate after quitting his corporate job at Coinbase. That was the call that we had today. So again, bro, whatever you guys want to do, man, I hope I could help you. And I think a long-term in real estate is going to have your back no matter what. Like, you know what I'm saying? And it's in moving and preparing and planning and being on the lookout for. You know what I'm going to say, bro? Like, you got to really, like, I'm telling you, it's fire. So I hope y'all feel me, bro. I hope y'all feel me. So, Chattadonia, on that note, I think we call it a night. That's good. Just under an hour. Yeah, it's good, man. But I did that instead of the editing. But I love you. I will see you on the live stream tomorrow. Just recognize you're blessed. Remember, good headspace, baby. When you lay that head on that little pillow, bro, just be like, wow, you blessed. You blessed, baby. Thank you, man. I really appreciate y'all, man. For all y'all who have supported through all of it. I remember all of y'all. You know that. You know I got a wicked memory sometimes. So, and that's why the hungry people. You know, where was you at when the money was gone? You know, where was you at when they kept shadow banning us? Where was you at when you could have got that lantern? So let's go, baby. But you have a blessed night, okay? I will see y'all in the morning. Thank you all again, though, for real. I love y'all, and big shout out to the real ones out there. And let's get it, man. Get that long-term finger to the sky. Don't ever forget why we're here. They know, baby. They know, baby. But I love you. Have a wonderful evening. And peace out. Harder.